The Russia-Ukraine crisis continues. This crisis is set to have a major impact on the global economy, including India. India may see its inflation jump in the short run, and at the same time, many of the foreign portfolio investors are already taking a cautious call on Indian equities and in the Indian bond market. But at the same time, probably this crisis may just have a silver lining for the Indian economy. I am Sachin, senior editor with the Economic Times, and we'll go through what is the crisis leading to and how this could have some impact on the Indian economy.
We find that wars are typically inflationary in nature, and this war is not going to be any exception. It is going to have an inflationary impact on India's economy. Now, if you see the commodity prices, the prices of crude oil, metals, agri-commodities like food grains, oilseeds, all have surged to some record high levels. So in such a scenario, it's quite likely, I think, that RBI will be compelled to raise interest rates sooner rather than later. And this is going to kind of curb the liquidity in the system and also have clamped down on consumers.
The first silver lining for India out of this crisis is the exports. The Indian rupee has devalued against the US dollar. This is set to give incentive to the Indian exporters. Not just that, Ukraine and Russia are the major exporters of food grains, including wheat and corn. This is where India comes in.
Thanks to the weakness of the Indian rupee, you see exporters gaining higher realizations in the near term. Now, Indian rupee few days ago touched a record weak level of almost 77 mark to the dollar. Now, if you compare this same rupee with its year ago level, it was at 73 level mark a dollar. So that kind of shows the kind of depreciation the rupee has had over the last 1 year, and which definitely is positive for India's exporters. Now, another category of companies which will also gain in the near term because of the inflation in metal prices is the metal and mining companies, the commodity producers, the suppliers. They are definitely in for higher realizations of their commodities in the near term at least. Exports of food grains like wheat especially deserve a mention here. The Russia-Ukraine region accounts for around 30% of global wheat exports. Now, disruption in this region have obviously pushed wheat prices up to almost 14-year high level. Now, given this scenario, India, being the second largest exporter of wheat, stands to gain. The US Department of Agriculture has estimated that in this fiscal year, India is likely to export around 10 million tons of wheat. And this is definitely positive for even companies like ITC, which are big in wheat exports.
India, as of today, has about 400 million tons of wheat lying as its stockpile. India has already started exporting or is already in conversations for exports throughout the Middle East, and you will see that food grains from India will start getting exported to Lebanon and to Turkey in the coming months. Now, coming on to aluminium and steel, Russia and Ukraine export about 10% of the global demand. Here comes India. India is one of the major exporters of aluminium and steel, and going ahead, you would see that these exports will also increase, especially to European countries and to the US in the months to come. Some of the Indian companies, including Tata Steel or JSW, might have a direct impact.
India imports 85% of its crude oil requirements, and with crude surging to $140 a barrel, it was definitely a crisis situation for India and its economy. Thankfully now, as the war premium has evaporated, the crude is back below $100 a barrel. So, it's a much better situation. It's a relief in the near term, but The surge did show how bad things can become for India and its fiscal deficit situation in the near term because of the war. And if the war actually turns nasty, we are definitely in for trouble on the economic front. As per the broad industry calculations, a 10% increase in crude oil prices amounts to around 10 basis points increase in consumer price inflation in India. So the economists have pegged the overall impact of this war on the inflation to be around 100 basis points. That means effectively the inflation could be 6%.
India has been trying to diversify its imports for the longest time, and this crisis might just prove to be an opportunity to do so. Now, first thing first, if the US is able to strike a deal with Iran and Venezuela, then India may be able to export oil from these countries rather than getting into the patchy waters and importing crude from Russia. Now, if that happens, you will see that India will be able to import oil at much better prices than say what it is importing as of now from the Middle East. Venezuela rather, already owes about $400 million to the Indian government, and to that extent, India would directly be able to receive that amount if the deal is struck. On the other hand, if India decides to be more adventurous and continues to import crude or any other oil and gas from Russia, now this might not be illegal, but this is definitely being frowned upon by the West.
Well, our message to any country continues to be that obviously abide by the sanctions, but that we have put in place and recommended. I don't believe this would be violating that, but also think about where you want to stand when the history books are written in this moment in time. And support for the Russian leadership is support for an invasion that obviously is having a devastating impact.
But if India is able to pull this through, then you would also see that India might just be in a commanding position when it comes to prices. Thus, import bill might just come down a bit in the short run at least. Continue watching this channel as we follow through the crisis and the impact it could have on the Indian economy. This is Sachin, Senior Editor with the Economic Times.